Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. All eyes are on the RBA and the US Federal Reserve, the Fed. And while nobody's expecting a move on interest rates, the focus is instead on whether either will make any pronouncements regarding the timing of a future rate cut. I'll discuss in a moment whether beguiling attention on the Fed and the RBA is spurious. For the moment, however, let me cave to the pressure and provide an opinion. Last week, all three major US indices lost ground. The decline might have been in response to a reappraisal of the Fed's rate-cutting blueprint. Today, most believe the Fed won't be cutting rates as soon as once anticipated. The recent US inflation data is firmer, and their job market still looks robust. So the central bank is unlikely to signal any urgency with respect to rate cuts. Some economists and commentators believe that the Fed may signal a reduced pace of rate cuts this year, from the hitherto expected 3 rate cuts to just 2 or even less. In Australia, the RBA seems to be willing to tolerate a slightly higher level of inflation because it confers on the economy the benefit of salubrious employment conditions. The consequence, however, is that rates may take longer to be cut by the RBA than by overseas peers. In fact, not a single economist, of which more than 40 were surveyed by Bloomberg, expect the RBA to move on rates this week. But does any of this really matter? Certainly doesn't to the long-term investor. Since first purchasing shares in Berkshire Hathaway in 1962 and then taking control of the then beleaguered textile company in 1965, Warren Buffett has been investing successfully in companies listed on public markets. Meanwhile, the US Federal Reserve's Open Market Committee minutes and records of policy decisions go back to 1936. What do I mean by all of this? Well, imagine Warren Buffett and then subsequently with Charlie Munger. Imagine they'd fretted over every rate decision or Fed meeting since 1965. Charlie Munger recently passed away just weeks from his 100th birthday. I suspect he would have passed much earlier if he had worried about each Fed decision, the way investors pore over them today. More importantly, history reveals that those Fed decisions didn't matter at all in the long run, and certainly not to the wealth accumulation enjoyed by those who invested in Berkshire. Those 470-odd Fed meetings between when Warren Buffett took control of Berkshire Hathaway and today, they haven't mattered at all. Right now, you might be thinking about how the market is going to react to news the Fed pulls back from 3 possible rate cuts this year to just 2 cuts, or even 1. Sure, the market might react negatively, but therein lies the opportunity, don't you think? Don't listen to the market. Take advantage of it. As Wall Street's Dean of Value Investing, Ben Graham, once noted, it's not the market's wisdom you should be interested in, but its wallet. As investors this week, you should keep the bigger picture in mind. Take a look at this table prepared by Gary and Dom at the Montgomery Small Companies Fund. We used to be in an environment of rapidly rising rates. Now rates appear to have peaked. They may not drop quickly, but they're even less likely to go up. Last year, investors were worried undeservedly about a recession. Today, a soft landing is all but guaranteed. Meanwhile, those recession and rate hike concerns had many investors worried about corporate earnings. Today, as the recent reporting season revealed, earnings are resilient and in some cases growing robustly. And finally, high cash levels are giving way to the deployment of that cash into judiciously selected stocks, even small caps, which, as an aside, I think could seriously outperform over the next 18 to 24 months. So forget about central bank meetings, rate rises and cuts, and just focus on buying high quality businesses that are growing, those that enjoy sectoral tailwinds and have pricing power or other competitive advantages. You'll do fine long term, irrespective of what the central banks do or don't do next. That's all we have time for today. Look forward to talking with you next week, and in the meantime, follow us on Facebook and X.